So is the AI bubble about to burst? I'm going to go through a lot of data with you today, which will absolutely shock you. We're getting constant promises of AGI, but what's really going on behind the scenes? Guys, if you're new to the channel, don't forget to hit like and subscribe. We're going to start here with the S&P 500 and how much of the S&P 500 is AI related stocks. What's scary is right now, as of November 2025, we're nearly at 50%. And that's not in terms of number of companies, that's in terms of market capitalization. And that is way up compared to only 2 years ago when we were around 25%. So literally we've doubled. And when you compare this to what happened in the year 2000, you can see here on this chart that the total value of all stocks as compared to the GDP ratio was very, very high. That was back in 2000. Very, very high. So around 140% or so. And back great financial crisis, it was also high. It was around 100%. But over the last few years, it's just been getting higher and higher and higher. And it's even higher now than just before COVID, so pre-COVID. We're well over 200%. And this was an interesting post which kind of gives you a bit of a backstory to all of this. Investors have dumped billions into these AI companies and they're burning cash faster than they can actually get their hands on it, which is why we had all of this drama recently with Sam Altman and OpenAI and what they were saying in terms of the government potentially being a backstop. The problem is no AI company still is even close to profitable. What they're doing is they're promising future revenue, future growth, like in the year 2030. That's kind of what was going on at the time of the internet bubble. So even if ChatGPT charged all of its users $1,000 a month for access right now, it would take years to even break even. And as we're expecting on all of these different platforms, as soon as they can, there will be ads. But what I've seen recently is some companies like Google, they're offering a lot of incentives, free access, for example, for students and stuff like that. The thing is, this is all going to bring down the cost of using AI, obviously. And AI in itself, remember, as it develops, is supposed to be deflationary. So everything can and will get cheaper, which will then make monetizing it incredibly difficult. And I think that's when the problems likely will come. We're going to have a look at the charts in just a minute, but this is what a lot of people have been talking about. This circle of kind of cash swimming around in the AI space between the big companies. And as you probably heard, Michael Burry has taken a massive short position now against some of these big AI tech companies. And this is a really, really good summary, a good way to kind of understand what's going on here. So NVIDIA doesn't just sell chips, it manufactures its demand for its own chips. This kind of positive feedback loop then justifies more investment into this loop. And you can describe this as a monopsony rather than a monopoly. Market with just a few players, and they don't compete on product, these different firms. They compete on how much hardware they can pre-buy and stockpile. And the more hardware they have, the more funding. So their valuations are derived not from the user revenue again, as we said before, but how much compute they actually just control. So they're not funding product growth as we already worked out. They're funding massive infrastructure build out. So data centers, GPU clusters, etc. And this is a nice analogy. This is what happens when financial markets treat servers like oil wells. You invest in future extraction capacity, not present profitability. So the demand here is not organic, it's businesses or it's not businesses or consumers, it's AI startups, AI labs spending investor money to do more AI things that they can't themselves yet monetize. And the nightmare scenario, which I think we're already seeing, too much GPU build out, too little actual demand, and it's too late to scale back. And we had this with fiber optics in 2001. So again, another comparison to the internet bubble. And this is what you would have seen on social media as well. So these are the short positions Michael Burry had taken. So NVIDIA, you can see there, 186 million, Palantir, 912. So a 1.1 billion put position. And we saw that very nervous interview from the Palantir CEO. So this is the question, and I suppose one of the main questions you guys might be wondering, are we right at the top of the bubble, or do we have still a little bit to go, or maybe a lot to go? Maybe is there still another 12 months of this bubble to inflate? Because very likely, we're going to see massive corrections anyway at some point. We always do in the stock market. But if it's going to be a bubble collapse like the internet bubble, nobody knows for sure. But based on everything I'm seeing, you would argue there's very, very good chance of that happening, and that would drag down all stocks like every crash does. It doesn't matter if it's AI related or not. And this is what I was saying earlier, like all these mentions of artificial general intelligence and stuff, which we've all been, somewhat excited about over the last year or two. They kind of give little hints near here and there, but nobody's anywhere close. It seems like the chatbots are kind of limited to progress. I've not seen that much crazy progress in the last few months, apart from just, apps building on top of apps. And this is what's going on in this circular kind of economy here. Every dollar raised goes to burn GPUs. Every GPU turns into a higher valuation. Valuation justifies more raises justifies more compute. 100% synthetic. Nvidia is almost injecting liquidity into the system like a central bank. And I completely agree with this post where it's the illusion of approaching AGI. We're going to be the first to reach it, so we need to hurry up. We need to beat China, etc., etc. So we need to just get as much compute as possible, because the more compute means the better the AI and the more likely they're going to achieve AGI, which is, very likely not true. And the best part, nobody knows what AGI looks like. There is no finish line. The burn never has to end. But again, what we've already seen in the numbers, cloud growth is actually flatlining. And AI monetization, as we talked about, is turning out to be way harder. And actually, I couldn't find this chart, but in terms of users of ChatGPT, I think it's on a downtrend compared to Google Gemini and Claude as well, actually, which is probably not a good sign for them. And I've said this before in my videos, but when we're looking at the charts here, it's very, very hard when you're in a bubble to predict kind of where it's going to end. But usually what you would expect is a blow-off top on reduced momentum. So we'd get a push-up. Ideally, that would be a third wave, and then we would get a fifth wave on reduced momentum. That I think, based on this chart, this final move from April looked like it was development of fifth move. This move up from April, I think, was this final fifth wave move. So I think we could be very, very close. And if you have a look at momentum, this is now on a weekly chart. You can see a lot of the momentum, the third wave, does tally up with late 2024. So that kind of does tally up. So it looks like this is a reduced momentum move. And it's all about now just analyzing this move from April. And if we break structure, we're kind of holding on support. But if we start breaking down from here for Nvidia coming under 160 and stuff, you start thinking, it's very likely, over. The only other possibility, and you can't rule this out either, is if this final move is going to be a longer move. So we get a correction in the stock market, fine. We get a correction 2-3 months, and it's a final 5-wave move up. So we still have another 6 to 12 months to go. And that's the only other thing to look out for. But if we break through these levels and we start challenging these April lows, I think it's pretty obvious to everyone. So basically, when you look at the NASDAQ 100, what you have to notice from October, November 2022, we've been on this massive run up. When did ChatGPT come out? When was it really, really popular and people actually start using it as a chatbot and started getting daily kind of advice and stuff like that? It was around here. That's where everything kind of kicked off. So this is the AI bubble, what we've seen recently. And my point, as I made earlier, is the revolution with AI, the amazing scientific discovery, stuff like that, where it actually replaces people genuinely in terms of work, and it helps you in your daily life every single day. That's probably years down the line. The same with the internet. Right now, in the short term, is a speculative bubble, obviously. And there's a lot of lies being told on social media and a lot of pumping AGI and stuff like that. And right now it's just dollars going round and round in circles. And I think a lot of people know it's a bubble. And the thing is, when you know it's a bubble and we've experienced the internet one, does that make the bubble last longer? Because everybody could be wrong. That's what some people think. Or does it deflate faster? Or maybe the downfall's not as epic. I don't know the answer to that. But my feeling is we're actually quite close to a top. I think very, very close. I think if not already in the next kind of couple of months, that would be it for the stock market with a big correction. And I don't think we're going to get the same thing as the internet one because people are too savvy now. They're too clued up. You're not going to get that random, crazy, direct vertical rise, which was based on nothing, where just everybody was just aping in. Kind of like crypto in 2017. I don't ended 2017. I don't think that's going to happen at this time. But yeah, let me know what you think in the comment section below, and I'll do more updates on this. Thanks for listening.